aspects of our operating model, given that we are recently listed company. For the benefit of new listeners, I will go through one time. The Rainbow is currently country's largest pediatric hospital chain with 15 hospitals, 1,550 beds across 6 cities. Our pediatric services under Rainbow brand includes newborn and pediatric intensive care services, pediatric multispecialty, pediatric quaternary care, including organ transplantation. Birthright by Rainbow is an integral part of Rainbow Hospital. It is a perinatal center offering normal and complex obstetric care, multidisciplinary fetal care, perinatal genetics and fertility, in addition to that, gynecological services. Rainbow Children's Hospital is built on a strong fundamentals of multidisciplinary approach with a full-time 24/7 consultant-led service in a child-centric environment. Children's hospitals across the world have been built on these core fundamentals. We follow a hub and spoke model where the hub hospital provides comprehensive multispecialty pediatric services with an advanced tertiary and quaternary care services, while the spokes provide 24/7 emergency care, large outpatients as well as inpatient services for the wider coverage of the cities. We run the country's largest academic training program for pediatrics and pediatric super specialties in the private healthcare sector, offering postgraduate training in a residential DNB program as well as fellowship programs. Comes to performance for the quarter, historically the strong momentum of the second quarter continues into the third quarter. That is high occupancy, large patient footfalls and relatively robust financial performance. We experienced a similar trend from the second quarter into the third quarter across all key operating metrics like occupancy, outpatients, inpatients and delivery volumes across all our hospitals. The occupancy for the current quarter was 57.06 compared to the 51.55% in the corresponding year of the last financial year. The occupancy was lower compared to the previous quarter as a result of a significant the seasonal volume witnessed in the second quarter. The ARPOB for the current quarter stands at 48,700 rupees, which is a growth of 7% compared to the 45,600 in the corresponding quarter of the last financial year, and a growth of 4% compared to the previous quarter of ARPOB of 47,000. I am pleased to inform you that the company has delivered robust quarterly performance led by high patient footfalls across all hospitals in every geography. The revenues for Q3 stood at 306.4 crores with a growth of 23.17%. EBITDA of 106.7 crores, which is stands at 19.59% compared to the previous year. The PAT Q3 of FY23 is 58.2 crores, which is with a growth of 28.87% compared to the previous year. Further, we have concluded our negotiations with the insurance companies for the Hyderabad cluster, and the new insurance tariff will be applicable from the next month. With this, we have renewed all our major insurance contracts across the group. In terms of expansions, the spoke hospital in OMR Road in Chennai has commenced operations in 2022 and is going as per the expectations. The new hospital in Hyderabad Financial District is 100 beds, is close to completion. It's going to be operational in a few weeks' time. This is strategically located in the rapidly growing financial district of Hyderabad with a lot of young population. We are adding another 50 beds to a Hydernagar branch, which is having a difficulty in accommodating the volumes. So this is a block which is getting built adjacent to the Hydernagar for the demand, which is expected to come in over next 6 months' time. So the other branch in Hyderabad city, which is in the central Hyderabad, is progressing well, which is expected to commence in the next financial year. So we'll deepen our presence in Chennai city with another 80 beds hospital, which is currently in construction phase. It's going to come into operations by next financial year. The work commenced for the 60 bed spoke in Bangalore and the 100 beds regional spoke in Rajahmundry in Andhra Pradesh are expected to be completed in 18 months and 24 months respectively. I go to a bit of clinical excellence. From the clinical side, I'm pleased to inform you that we have surpassed outpatient volumes of last full year in the current 9 months and close to inpatient volumes of the last full year. As the current year being normal with the regular schools, we have witnessed a significant increase in the outpatients and inpatient volumes with a pronounced seasonal illnesses. And some of them were actually very sick, requiring intensive care services. Our doctors and paramedic staffs have been extremely busy all through the 9 months, and the trend seems to be continuing. I am pleased to share that our outcomes of tertiary care have been very good. The liver transplant survivals for last 9 months have been over 90%, which is very close to the Western standards. And the pediatric cardiac surgical mortality is less than 2%, which is close to international standards, with the 50% being the complex congenital heart conditions. So I take this opportunity to thank all my doctor colleagues and paramedical staff for putting an untiring efforts to deal with such large volumes, yet achieving excellent outcomes. The CDC exit. During this quarter, our long-term investor for 9 years, British International Investment PLC, formerly known as CDC Group Private PLC, divested the balance equity shareholding of 14.45% stake in the company, which was subscribed with the marquee long-term investors. I welcome all the new investors to the company. In conclusion, to summarize the current quarter, the first 9 months of the year largely been as per the expectations. The business has returned back to normalcy with our operating parameters demonstrating a strong growth. With that, I conclude and hope to continue our conversation in the subsequent quarter. Over to our CFO, Mr. Gauri Shankar, to present the financial numbers.
Thank you very much, sir. Good morning to you all, and wishing you all a very happy and healthy New Year. I would like to thank you all for taking out your time and joining in this earnings update call. So I would like to share some few insights on our financial performance during the period under review. First, I will go with the quarterly performance. So moving on to the quarterly performance, revenue stood at 306.4 crores, growing by 23% over the corresponding quarter of the FY22. EBITDA margin for Q3 FY23 stood at 34.84%, which is at 106.76 crores. EBITDA has grown by 20% over the corresponding quarter of last financial year. PAT for Q3 FY23 stood at 58.24 crores. PAT margin for the quarter stands at 18.5%, and PAT margin for the current quarter Q3 grew by 29% over corresponding quarter of the last year. OP and IP volumes for the current quarter has grown by 37% and 16% over the corresponding period of FY22. We have recorded an impressive 57% occupancy during the quarter. Mature hospitals have witnessed 63% occupancy, and new hospitals have witnessed 42% occupancy during Q3 of FY23. Our return on capital employed and return on equity stands at 8.23% and 5.96% for the Q3 of FY22, which are not annualized. Our payer mix for the quarter stands at 49% credit and 51% is cash. And with respect to 9 months performance, so on the basis of consolidated financials for 9 months FY23, we have delivered a revenue of 857 crores as against 761 crores in the corresponding period of last year. The top line has grown by 12.5% over last year, and if we exclude the COVID vaccination impact of 92 crores, which was one time, so the normalized revenue has grown by 28% over the last year actual revenue. EBITDA margin stood at 35%, growing by 16% over the 9 months period of FY22 and stands at 298 crores. Profit after tax for 9 months FY23 stood at 158 crores as against 126 crores for the 9 months FY22. PAT margin grew by 25% over the 9 months FY22. OP volume grew by 47% and IP volume grew by 24%, and delivery numbers have grown by 12% over the corresponding period of FY22. ARPA for 9 months ended December in FY23 has shown a growth of 7% over corresponding periods ARPA. This excluding the vaccination, the one-time core vaccination impact. Occupancy stood at 54% for 9 months period in FY23 compared to 46% of the corresponding period of FY22. So during this 9 months, we have incurred a capex of about 88 crores, and for the quarter Q3 we have incurred about 29 crores of capex. This is towards our OMR financial district Annanagar and Marapalli projects and our regular capex. So we have utilized 60.9 crores from the IPO profits towards repayment of NCD and for project capex as stated in our prospectus. With this, I conclude my remarks. Once again, I would like to thank you all for joining this call. We can open for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Madan Gopal from Sundaram Mutual Fund. Please go ahead.
Good morning, Mr. Ramesh.
Good morning.
Congrats on the good set of numbers. I had just one question. From an occupancy point of view, sequential decline in new hospitals, but in the same period, mature hospitals occupancy has improved sequentially. How do we rate this? And from a next, say, 1 or 2 years perspective, how do you see the new hospitals improving the occupancy levels? If you can comment on it.
Yeah. Thank you, Mr. Madan Gopal. Generally, the occupancy which we are talking about is a quarter-wise, right? So when we look at the quarter-wise, even in the matured hospitals, we have seen some decline from 67% to the 63%. In the maturing hospitals, 47 to 42. This is because what we do is generally second and third quarters are the peak seasons for the pediatric business. But however, it changed a little bit. What we witnessed is in the second quarter is there is the significant illness which required admissions, more of a short-term admissions, like a viral illnesses, people coming into hospital for a day or two. That pushes up the occupancy. So that is seen in both mature and maturing hospitals. When we look at moving into the kind of a third quarter, what we have seen is though there is a decline of an average about 3.5%, but we don't see that significant revenue dip as well. So that quality comes into the play. So at some point, sometimes it varies. It moves to the third quarter. Sometimes it comes in the second quarter. It all depends on the monsoon seasons and various other factors.
And also, Madan, to add to Dr. Ramesh, the OMR facility, which was there in Q2 only for a month, had a full impact in this quarter. It's a very recent facility where the occupancy tends to be lower. Hence, you see that impact of occupancy on a sequential quarter being lower.
So how do we see this new hospitals occupancy improving, say in 2 years, should we look at from a yearly perspective, them touching around 50-55% levels? Is it 55% looks possible in the new hospitals?
Yeah.
Obviously, some new hospitals are coming up now also. I'm talking about the ones which are already operational and categorized as new hospitals.
I think, well, we have discussed this in the past as well. So what happens is the pediatric hospitals and our business is very, very organic, unlike multi-specialties where you have a government. We don't do much of government. It's more of an organic business. So it takes its own time. But at the same time, when you look at it, our where we break even is we break even our hospitals at 30%. Compared to multi-specialties, breaking in close to 40%. So therefore, I think the growth for us is kind of a pretty steady. It takes its own time to grow. The capacity building is always very, very important because that's what we see today in Hyderabad is that we are having a difficulty in accommodating patients, so that we are kind of expanding in Hyderabad significantly.
Sure. So you're saying it's a steady improvement from the current that should be expected. One more question on the new facility that you have added in OMR in Chennai. Typically, in first 2 years, what sort of occupancy do you really target compared to the overall the other hospitals are coming up?
I think, we rather than targeting it, what we look at is our projections always been like, how do we kind of capture the market to see in terms of OPD footfalls. Then it comes to the kind of the other metrics like how the ICUs are filling up, how the deliveries and numbers are increasing. That's how we look at it. In terms of occupancy per se is something, it's kind of it moves to kind of end of the year 30%. Is a pretty impressive for us. When we see our occupancy clocking at 30% and end of the year is a success story for us because we break even at that point.
Okay.
I would expect OMR to go that way in Chennai.
Great, sir. Thank you and wish you all the best.
Thank you, Mr. Madan. Thank you.
Thank you. The next question is from the line of Hitesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. So I have 3 questions. To the previous participant, how much time does it take to reach the 30% occupancy once the hospital is open? That's my first question. My second question is on the insurance price hike that we received at the beginning of the year. Has that flowed down to your revenue number, or is it yet to flow down to your revenue and margin? And my third question is, I just want to understand the count of beds that are going to get added, have been added in FY23 or supposed to be added in FY23 and FY24.
Okay. So the first question is that now why we typically break even at 30-31% of the occupancy, which normally we expect that our cash break-even comes about 18 months in the existing cities where we are already present. So from there it keeps moving on. The second question is about
insurance price hike.
Price hike. So currently we have already had a price hike of insurance Chennai, Bangalore, and Delhi of 25% hike that we had. And currently we are Hyderabad is matured that is place where I think our price hike is about
6%.
Yeah, about around 9 to 10% price hike what we got in Hyderabad.
And that's about more than 50% of our business, right?
Yeah, that's right.
Only on the inpatient business, Pritesh, just to confirm, the outpatient business is separate. Whatever insurance tariff hike that we are talking is on the inpatient business.
So can you quantify what portion of the total business of 50% is Hyderabad and inpatient is how much percent of that?
So inpatient is generally about between 70 to 72% of our business, and about 28 to 30% of our business is outpatient business.
So 40% of our, which means 40% of our business, and then there will be a payer mix of insurance, which is another, let's say 40%. So let's say 1/4 of our business has got this 10% price hike.
Correct.
You're right.
You are right. Yes.
And that should start reflecting from next quarter, right?
No, so for Bangalore, Chennai and New Delhi, it was done in last year. So you have already seen that being reflected in the RPOB and the revenues over the period. Mm-hmm. It's the Hyderabad only that we have done now, and the tariff hike would be there from next month onwards. So you'll see the impact coming in from the Q4, half of Q4 and Q1 onwards, particularly in Hyderabad market. Rest is already priced in.
Yeah, so we calculated Hyderabad after all calculation as 1/4, right? More than 50% business is Hyderabad, in which inpatient is 60-70%, in which payer mix is about 40% by insurance. So that's how we calculated, right?
Yes, yes, sir.
Okay.
You are right.
And sir, the bed count, if you could tell us what is the bed count addition in FY23 and FY24? Incremental beds, I want to know.
Okay.
So we had earlier guided, I think, about 150 beds per annum. Where are we on that, I think?
I think we are right on the track, actually. Currently, we have done 55 beds in Chennai, and there is 100 beds to be inaugurated in the last quarter of the current financial year. Moving on to next financial year, we have about 80 beds coming in Chennai city, in Anna Nagar, and also we have 60 beds coming in Hyderabad, as a central Hyderabad, another 50 beds coming in the addition to one of our spokes in Hyderabad. The cumulatively together about 200 beds are going to come next year.
So you mentioned 55 has already come in Chennai, plus 90 at the year end, plus another 50 next year. That is Chennai, right?
That's it.
Then you mentioned Hyderabad as next year only all the beds. How many you said?
The Hyderabad is going to be added. We're going to add 200 beds from now to the next 10 months' time. So the current year, we will have about 100 beds addition. The next year, we will have about the 80 plus 60, 140 beds.
This is what? This is Hyderabad?
Hyderabad, yeah.
So 80 plus 140.
80 plus 50, 130 beds.
Okay, 80 plus 50. Okay, done, sir. Thank you. Thank you very much.
Thank you.
Thank you.
A reminder to our participants, please enter star and 1 to ask a question. The next question is from the line of Bansi Desai from JP Morgan. Please go ahead.
Yeah, hi. Thank you for taking my question. Sir, I have two questions. So firstly, on the mature hospitals, we've done a good occupancy of 63%, and I'm assuming Hyderabad cluster would have done better than this. So my question is, how are the, other hospitals, especially in the Bangalore cluster, doing for us? Maratha Ali, BG Road, I guess, these two had a lot of scope of improvement in terms of occupancy margins. So if you can just comment on, how are the trends here? What are you seeing? And, what's the outlook for these two names especially?
Ms. Desai, Bangalore is doing well, and we had an occupancy of, we put it as a matured and maturing hospital. So in Bangalore, we had one maturing hospital, one matured, 2 are maturing hospitals. Together, our occupancy is about 42%
in Bangalore cluster.
42% Bangalore cluster.
All put together, which was 30% in last quarter.
Yeah, all put together. So what we have seen in Bangalore is a significant fraction of our patients built up in the last 1 year, and also there is occupancies have increased in both primarily our main hub hospital as well as Bannerghatta Road Hospital. So when you look at these two hospitals together, they've gone past 50% occupancy.
You've crossed 50% is what you said?
Yes. Yeah, 48.8%. Yeah, close to.
Okay, that's nice to hear. And so my second question is on the New Delhi cluster. So here, I remember last time, you'd mentioned in the previous quarter, Delhi was, seeing good traction. So if you can comment on, how it has done in this quarter, and then, what are your, where are you in terms of your expansion plans here in Delhi? You've spoken about adding 200 beds in the next 2-3 years. So any update on that?
Yes, so Delhi is actually tracking well. This current year, there is no, one is our Madhukar Rainbow Children's Hospital. That's one. Other one is Rosewalk. Rosewalk is only, the boutique center. The main hospital in Delhi is doing well. It's a positive EBITDA this time, and we are clocking about 40% occupancy this year. And deliveries have picked up very well in South Delhi. I think we do a largest number of deliveries in South Delhi today. even intensive cases are getting busier. So we see a positive traction in Delhi Madhukar Rainbow. The Rose Walk, which was kind of a loss-making last year, and it's come to the EBITDA neutral today. So we have changed our model to Rainbow model. Earlier, it used to be kind of luxury birthing center. So we changed the model to more like our birthright services. So ever since that, things are changing in a positive direction. So we hope to kind of do well in the coming year.
Okay, sir. And any update on the expansion?
Expansions, I think the work is in progress. Probably, I think I will be able to give a better update in the next quarter earnings call.
Sure, sir. Thank you. I have more questions. I'll join back the queue.
Thank you. Thanks a lot, ma'am.
Hello.
Tushar, please unmute your line and proceed with the question.
Is it my turn?
Yes, Tushar Manudhane from Motilal Oswal. Please go ahead.
Okay. Thanks for the opportunity. Sir, just on the OP side, on the existing hospitals, how much is the further scope to increase the OP volumes? Because if I take the current volume and let's say number of hospitals to be 15, so it roughly comes out to be 3,000 per day sort of OP volumes. So how much is the further scope to sweat?
Oh, there is a significant scope to increase further volumes because we have almost 40% of the hospitals are new. We keep adding the new hospitals. That's where the OP volumes keep building it up. And also, even the existing hospitals also continue to grow because there is a lot of services are there, like specialty services, so they keep growing. So when you look at it, this is the first year coming back from the pandemic. What we have seen is almost 45% growth, 47% growth from the last year or outpatient volumes. And we expect to see that significant growth year on year. As we grow number of hospitals, the OPD volumes keep growing further.
And so what's been your experience in terms of any seasonality related to OP volumes?
Seasonality related to?
Yeah, of course. Seasonality plays a big role in the pediatric business. Almost the seasonality variation is almost 25% to 30% volumes, which we see for second and third quarter volumes will be almost 20% different from the first and fourth quarter. So that's being the season.
So fourth quarter would be better off, right, compared to third quarter?
Yeah.
Okay, sir. Thanks. That's it for me. Thank you.
Well, thank you.
Thank you. The next question is from the line of Mayank Yanki from Axis AMC. Please go ahead. Mayank, your line is unmuted. I request you to please unmute yourself and proceed with the question.
Yes, hi. Thank you. Yeah, good morning. My question is on Madhukar Trust Hospital, basically. So just like you mentioned, the profitability levels in the Rose Walk, if you could highlight the profitability of Madhukar Hospital, how is it trending? And, on the ICD's part, is the hospital now able to service its ICD interest rates payments to the parent company?
So, yes, this year I think the Madhukar Hospital has done about 10% EBITDA. There is a positive and the trend is, it's picking up well. And with respect to the serviceability of that ICD, yes, that the last quarter we got back about 2.5 crores of ICD money back from that hospital. And we are not infusing any funds, so it is sustaining as well as it starts repaying the money as well.
So this year, basically, we should see the overall outstanding amount of ICD plus interest coming off for
not in 1 year. Maybe it may take 2 years, but we can get it. So the coming year as well as the next year, we will do it actually. We can get back the money.
No, I'm just saying it will start coming off. The number will start coming off this year itself.
Yes, you are right. It'll come down. Yes.
Got it. Secondly, on the doctor consultancy charges, has there been any change in the model that this number is moving much ahead of the top line? And I mean, bearing FY21 where the top line got impacted, we have seen this ratio as a percentage of sales was also quite lower. Not quite lower, but a few percentage points lower than what it is in this quarter per se. So is it just because of the new hospitals where the cost is upfront, or has there been any change in the way either the remuneration is paid out or any change in the structure completely?
So generally in a growing stage, hospitals, we've always been a growing stage, and the professional charges, which is to doctors, about normally we guide about 24%. So it varies between 23 to 24, maybe a little over the 24%, depending on the number of new beds added. So when you kind of have a new hospitals, because Rainbow always hires the doctors on full-time basis and also on the retainer basis, definitely when you have a new beds, more new beds, it would probably go up by 0.5% or so on the consolidated level.
Okay, got it. One more question which I had was on the attrition side. So while the attrition for the industry is pretty large, we have seen that even at the time of IPO, your attrition was pretty high. For FY21, it was clocking at about 45% or so. So how is the attrition now, and is there any steps that you are taking to address this issue?
There are two things. One is the attrition at the doctor level is very minimal for us. The attrition at the staff and the nursing level and those things. So during the pandemic time, we have witnessed quite a significant number, because even pandemic has negatively played on the children's hospitals. So those days we were actually kind of not too concerned also to lower the numbers, because we were not doing a great occupancies, because our pandemic has no impact on children's health care. So now, currently, we have actually got back to the industry standards, and we are doing pretty well. About what's the
Erosion? 22%.
22%. That's well within the industry standards.
So 22% is for the non-doctor staff or for the company altogether?
Non-doctors.
Non-doctors.
Yeah, non-doctors.
Okay, great. Thank you. That's all from my side. Thank you.
Thanks a lot. Thank you. Thanks.
Thank you. The next question is on the line of Vinayak Mohta from Stallion Asset. Please go ahead.
Hello. Yeah, good morning. Am I audible?
Sorry, Vinayak, please use the handset, speaker, so not very clear.
Sure. Is this better?
Much better, thank you.
Yeah. So, sir, the first question I wanted to ask is, twofold. I just wanted to understand what is the potential that you see in the existing South location. What is the potential number of beds or hospitals that you could add over, the next 5-7 years, whatever potential you see? The second question was, in general, when you move into a new location like a Delhi, or you will be moving forward into new locations, how long does it take to break even, or, to generate that traction there? Because from what I understand is, as a children hospital, every region or a sub-location within that region as well has a certain hospital which people prefer going to, or which they have seen their parents or, some relatives go to. So people are not generally very, they are very thoughtful about going to a certain hospital that they know when it comes to a child. So how do you build that traction, and how long does it take
Yeah, it's a very good question. The reason is, one is that how large we can get to. So I never imagined that we could get to this large in Hyderabad city. So we are marching towards 1,000 beds probably in a year down the line in Hyderabad city. So that's the size which we will almost come closer to the multi-specialty side in Hyderabad city. So when we look at going to Bangalore and Chennai, we're adding more and more spokes and getting larger and larger. So when you typically go into the new city, So this is something what we typically do is when you go into a new city, we normally look at the building a hub hospital. So what is the shortage in children's health care for any city is that a multi-specialty children's hospital. That's what is shortage. There are many small mom and pop stores are there everywhere. So they are to cater for seasonal minor illnesses, seasonal illnesses, those things. So we go into the city with the concept of a children's hospital, which is a multi-specialty, where there is a children who could be treated for the complex conditions or critically unwell children. So that is our drive. That's always been our drive. That's how we went in Bangalore, we went in Chennai, we went in Delhi now, we went in Vijayawada. So then once to kind of establish our hub hospital, which typically takes any like multi-specialty going into a new city, will definitely take 3 to 4 years time to kind of get into the game. Then you start building the spokes in the area which is the rapidly growing parts of the city, and to kind of one is to kind of achieve wider coverage of the city. Second thing is to kind of by then your brand would have built, more and people wanted to come to you because the cities are all large and the distances are also kind of travel time is much significant. So therefore we try to work around the spokes. This is a typical model which actually we have seen is the most probably a kind of a way forward for children's healthcare is a hub and spoke model to cover the wider part of the cities of our Indian cities. So we're talking about two different things. One is that small children's hospitals, women and children hospitals are for 5 beds, 10 beds. They're all nursing home level or very smaller setups. So Rainbow looks at kind of a very different spectrum where we don't compete with those even individual pediatricians who are doing smaller. Perhaps most of them actually eventually kind of becomes our network smaller hospitals or network doctors to refer complexities and specialty hospitals towards our side, towards Rainbow. That has happened in Hyderabad. That's starting in Bangalore and Chennai. So this is what we expect to do in whichever the city we enter in.
Understood. So it is then to assume that you will, because you are reaching that mature stages in Hyderabad, Chennai, and now eventually you will in Delhi after a couple of years. So then you'll have scope to move to closer to 1,000 beds into these cities, and eventually you will move to a new city then, like you did in Delhi, to build your 3-4 year of gestation period, before which you can start expanding into the spokes and eventually towards the 1,000 potential beds that come in those cities, right?
Yeah, it keeps happening parallelly, the new city as well as the spokes in the existing city.
Understood. And so what is your capex per bed in general in the spokes and the hub hospital, and what kind of ROICs do you see that generally, for example, would be coming off in Hyderabad, and how long does it take a new hospital to reach to that kind of ROICs?
See, typically what happens is in places where we are already present. For example, Hyderabad, we are a super mature hospital. So if we do a hospital in Hyderabad, it's very unlikely to have any EBITDA negativity for even the end of the first year. So it will EBITDA break even or post some positive EBITDA, because that is the brand recall and image what Rainbow enjoys in Hyderabad. So places like Bangalore and Chennai, now I think we would do a positive EBITDA probably in 15 to 18 months' time. So there also that brand recall is high. People knows about Rainbow model. So we are now working in Delhi that because Rainbow is kind of started doing well in Delhi, that now we look at the Delhi differently to start looking at more of a NCR rather than Delhi alone. So in terms of cost per bed, when you go for a brownfield project, it depends on building to building and also location-wise. Normally we expect it to be about 60 lakh rupees per bed. And if we do a kind of a greenfield project, I don't think will be any different from the multi-specialty, because the today's standards are pretty same for whether it's children's hospital or multi-specialty hospital to build to the standards of National Building Code or to all the as well as statutory and regulatory.
Understood. And one last question. So we have around 1,555 as capacity and 1,171 operational beds. Where do you see this gap moving towards in the next 3 years? What kind of operational beds do you see in the next 2 to 3 years? And how much does it cost you to move a normal capacity to an operational bed? Like, is there some incremental cost that you incur, or yeah?
No, basically we are going to add another about this year we are going to add another 100 beds actually. So next year we are going to add about 200 beds. So in the coming year after that also another 200 beds will get added. So if you see we'll be adding about 500 beds actually. So which will cost us almost about 300 crores. And that is, and moreover, these are all new beds. And with respect to the existing one, we don't have much of capacity. There is always we are explaining that the capacity beds and the operational beds and whatever we have that non-census beds actually. So we have a lot of triage beds and all there, which will not be taken into account for our occupancy count actually. So there we may not be incurring much for adding the capacity. The capacity addition will be towards a new facility, and the CapEx will be towards a new facility.
Understood. Great. Thank you so much, sir, and all the best.
Thank you. Thanks, sir. Thank you.
Thank you. The next question is from the line of Karthik Narayan from SCP. Please go ahead.
Hey, thank you. Again, congratulations on a fantastic set of numbers, sir. And thanks for all that you do. Both my questions are follow-up questions to earlier questions. I think the first one was with respect to the insurance hike. So you mentioned around 8 to 10% in Hyderabad, which will reflect in the future in the coming quarters. What was the hike you received in the other cities, which has already been reflected in the numbers? I think that's the first question.
I think what we had, because Hyderabad is sequentially, we've been kind of going on the hikes. So the Chennai, Bangalore and Delhi, the hikes have happened after a long time, post-COVID first time, which is why we had a fairly decent correction to the 25%. We got most of the all the 3 geographies. That's already reflected from the second quarter on.
Understood, sir.
Hyderabad is about 9%. That's because we enjoy fairly premium rates in Hyderabad.
Understood. And so that's helpful. And my second question, sir, again was related to your the doctor cost. I think a gentleman had asked about the change. Yeah. If there's a change in business model, where you mentioned that it is with respect to new hospitals coming on stream, and versus the 4 or 25% revenue growth, we have close to 40% or 38 to 40% doctor cost increase. So is it fair to assume that will likely be the increase moving forward as well, given our expansion plans of 150 beds every year?
I think I expect it to be around 24%. If you ask me that, so this is how it is. Unless we take a completely different tangent in hiring doctors differently. But as a rainbow model, we always bank on full-time doctor engagement model. So we give a retainer significantly. We also look for the talent rather than practices of doctors. See, what happens in the children's healthcare scenario, a doctor who has got 100 patients will not transfer the business to Rainbow because he is only a primary care doctor. So we look at the doctors who are qualified, who are intensive care doctors, who are been trained very well from central institutes or outside the country. So obviously you need to give them a retainers for them to be comfortable to work with you for longer periods. So there's investment which we make. So as a good number of expansions going on, we recruit more number of these retainer doctors. That's what pushes up. At the same time, the doctors who are the hospitals which have kind of been in full capacity running hospitals, so it moderates the overall doctor cost. So blended, what we look at it, if you ask me where I wanted to be, I wanted to be between 23 to 24. One, I wanted to achieve me being a doctor promoter, being a medical hospital, And our doctors have got a very different, responsibilities also. They got to cover the hospitals in the middle of in the night as well. Almost all the hospitals are manned by a senior consultant. So compared to the combination of all those things, I think that's very fair that, what we do to the doctors is very good, and which is why very popular. We are very popular among doctors. So second important thing is where we get optimization. When you look at the peer groups of adults, where there is some moderation, advantage for us in the consumables, the 5-6% difference is there. We can optimize other costs. So we don't have so much of a marketing cost like other adults. So there are a lot of other areas which we optimize it and try to see that doctors are paid well and they work well also. These are the primary goals of a children's hospital.
Understood. No, so thank you for that clarification, and again, congratulations on a fantastic set of numbers.
Thank you, Mr. Kanti. Thank you.
Thank you. The next question is from the line of Naman Bhansali from Perpetuity Ventures LLP. Please go ahead.
Hi, sir. I have just one question. And what would be our pre-Ind AS margins for the quarter?
So pre-Ind AS margin for the quarter is to just give me 1 minute.
39%, no?
See, the pre-Ind AS EBITDA is 91 crore.
Percentage.
In terms of percentage, it will be about 29%.
Yeah.
Okay. And during the pre-IPO meeting, I think we have mentioned about, or the post-IPO, the first con call, we have mentioned about the sustainable margins to be around 24 to 25% on pre-Ind AS basis. So what is the gap we are seeing on the 29 to 25%, and how would you go forward going forward? How would you look at it going forward when new hospitals are coming in?
Well, naturally, we have appetite to grow in future, and we would like to keep. If we can keep about 25% guidance, I think this is pretty good for me. Achieving our goals as an organization in the longer term. I wouldn't really be ambitious to. What I think we post now today is our numbers. Pre-Ind AS 29, post-Ind AS 35. Probably the industry's best. So I can't be ambitious to continue to do while growing, building a children's healthcare for the country. So I think our optimism is about growth of 20%. That's what we have been saying. 18 to 20% growth year on year is something which we can expect it. Even we plan our expansions also keeping that in the mind.
Okay, so I was just coming from the point that what would be the gap which we have seen between the 25 to 29% that initially we had a plan of sustaining around 25%, and what has been the change which we have seen between the 400 beds?
I'll tell you the reason. The last 2 years, if you look at it, our number of beds being added is much. Most of the beds have reached the mature stage, and Hyderabad is super mature, and also the Bangalore and Chennai joined the party. Chennai perhaps joined the party quite early. So Vijayawada broke even in the second year itself. So these are all the things made us kind of accelerate our profitability. Hyderabad being a super mature and not having many beds being added in the last 1.5 year time, and the Chennai and Bangalore kind of there's no hospital which is eating away money at the moment. So, and this which is why we are on the peak of performing very well.
Basically, it's a leverage, the advantage of leverage. The fixed cost, when we add up for new beds, we will be adding, additional fixed costs we will be incurring. So since our expansion is less in the last 2 years, so we are enjoying the leverage actually. So that's where that margin has gone to 29%, and we are saying that we are going to add 1,000 beds in the next 5 years actually. So considering that, we said we will do optimistically that 25% EBITDA.
Got it. Thank you.
Thanks, sir. Thank you.
Thank you. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hello.
Yes, please go to the question.
Yeah, please.
Yeah, just wanted to understand the peak occupancy a mature hospital can have. Right now we are at around 63% occupancy levels for our mature hospitals. That is my first question. My second question, I just wanted to, if you can just identify which are the hub hospitals and which are the spokes hospital in your portfolio. And even the previous participant had asked that our operational capacity is around 1171 beds and our total capacity is 1555 beds. So typically, what will be the ratio from operational to total capacity? Typically, what it should look like. And my fourth question would be around the reinvestment side. So we are broadly going to be generating about 250 to 300 crores of cash flow from operations almost every year for the next 3 years or so. And we're going to be spending about 300 to 400 crores on capex. So what would be the rest of the capital would be doing on your balance sheet? Would it be dividend payouts, or would you be looking to buy, go for some greenfield expansion, let's say Noida or Gurgaon? So anything on that, if you can highlight.
Yeah, I think one is our occupancy levels, and I think we have reached 70 plus occupancy also in Hyderabad city, and what we're talking about is blended occupancies at a consolidated level. So when you look at the Hyderabad and Vijayawada, they have reached to the 70 plus % occupancies. But it's very difficult to achieve occupancies of 80 plus occupancy because of our differential areas of beds. For example, we have 18% of the beds in newborn intensive care. Newborn intensive care is all incubators, so we can't keep any other patient there. And also some isolation wards and some pediatric intensive care. So therefore, the very differential areas are there within the hospitals, so which is why whatever we see in Hyderabad is probably the peakest, which can happen to anywhere in the world in children's hospital. So in terms of operational beds to other triage beds and various things, usually if you can achieve it to the 80-20 is very good. So I think that's where we are in somewhere range. In moving forward in future, and we were trying to work on that, how can we reduce that to a 15%? So this is the exercise which we are in the progress now to, especially existing hospitals. We are working on that. How to make them at least partially revenue generating beds, like a daycare beds and those things. So there's exercise on cards now. So next is that in terms of capex.
So the surplus actually, we have currently also we have about 500 plus crores of cash balance, including the IPO proceeds. So what we have 1,000 beds, expansion plan actually. So in that phase, so that will about 600 to 700 crores we have to invest on that. And the balance money, anything is there. Definitely, the directors will consider, based on the situation, they can consider dividend actually. And other than that, we have, we will be consistently looking for good opportunities for acquisition as well actually. So right now it's not on the card. We will be looking for it actually.
Got it. Can you just identify which are the hub hospitals and spoke hospitals in your network?
Yeah, this Hyderabad is Hyderabad, Banjara Hills is a hub. In Bangalore, there is in Outer Ring Road near close to Marathal is a hub. Chennai is a hub. And Delhi, Malviya Nagar is a hub. And Vijayawada size is fairly big, about 135 beds. In Visakhapatnam, we built a capacity of almost like 175. We operate only 110 beds at the moment. That could go up also because those are all regional spokes. What we plan, with our experience of the past 20 years' time, when we look at the regions, when we go into the cities like two-tier cities like a place like Coimbatore, Vijayawada, and Vizag, these are cities definitely requires about 125 to 150 beds because they won't be a spoke model. There will be a one hub model. So places like in Hyderabad now where we are, probably we require one more hub in future. That's what we initially, our thought process is. And Delhi, what we are we are doing, we've been in discussions and doing diligence to probably do a large hub in Delhi. That's probably our next financial results. I will try to kind of cover those aspects of it.
So do you see the top 8 cities as potential for hubs? That is what you see for the next decade? Because you've already been in Hyderabad, Bangalore, Chennai, now Delhi. But do you see Bombay, maybe in Gujarat, maybe in the east also? There is potential for creating new hubs in the next decade?
Yeah, absolutely. Because we are only one operator now at the moment. We can only do what, we can't just, the problem with the children's healthcare is that now it's a very, very organic, it's a very, very demanding because you deal with the digital native population and most of the sickness is a critically ill, unpredictable, these ones. So a lot of emotional, a lot of these things. So you need to have a very, very robust operating model as well as a very strong doctor model. It's not something doctors coming and going out is not acceptable. You need to have a full-time doctor engagement model. So when you look at the developed world, but in US there are about 250 children's hospitals are there. Still they feel shortage. The country like us, which is prospering in every possible way. Every of our cities, almost whichever is got a 40-50